GameStop reports third quarter results after the bell tonight, but the real story isn't EPS whisper numbers or revenue consensus. It's whether CEO Ryan Cohen's no hype turnaround philosophy can finally translate into something measurable. That is very specific, the way this was worded. It is not about EPS or other numbers or the revenue consensus. It's about Ryan Cohen's turnaround play. Can he make something out of this company? Now, what's so interesting about that, they want to claim and say that it is specifically not for the numbers for a specific reason, and that is because GameStop is probably going to report good numbers. GameStop is set to report earnings tonight, guys, and we have a lot of stuff to talk about. They have beat in the last 5 out of 6 quarters, and one of the quarters was only revised down for some other reason. I forgot what it was. And analysts are expecting a beat. They're expecting $987.4 million in revenue, up 15% year over year. And earnings per share is projected at 20 cents, more than tripling the 6 cents from last year's Q3. Hardware sales jumped 31% in Q2 while collectibles surged 63%, becoming the second largest category. GameStop ended Q2 with $8.7 billion in cash and $528.6 million in Bitcoin holdings. And on top of all of that, they have rolled out more things, including their power packs, and I'm excited to see what they are going to do with that. Also, a little bit of tin before we jump into the charts. We saw that GameStop themselves posted this, which was founded 1776, right? And there's beautiful tin. Shout out to all the people who drop tin in my notifications and tag me in the comments because it is important for these videos, right? 1776 days after January 28th, 2021, which is when AMC and GameStop peaked, comes out to tonight, December 9th, 2025, which is beautiful tin. But on top of that, remember when Ryan Cohen tweeted, "I challenge Warren Buffett to a thumb war"? GameStop posted big winners, big surprises. You won't want to miss this. They are announcing their first GameStop Awards series that premieres tomorrow with a huge gold thumbs up. And that could be far-fetched tin if Greg didn't comment the eyes under that post, which also line up with a couple other tinfoil hat theories. They cross line up with each other. So all of that being said, that brings us into the charts. But if you haven't yet, make sure you are subscribed to my channel because YouTube loves to unsubscribe people. GameStop is at 23.42, and I'm going to give you the bearish case scenario first because I think it is less likely, but there is big risk to the up and downside. And as you can see, I have 2 arrows labeled on the chart. I see about a 27% implied move. And that comes earnings spike and then the following day, so Wednesday's trading day. And people are only expecting, I think, an 8 to 10% move. I expect a 27% move. Now, those levels are going to be 26.80 or so, 26.85, maybe 27.15, or a gap to the downside being $20.40 or 19.80. Okay, so you have those ranges, write them down. And what do I see here? Well, first of all, we are testing this breakout out of this wedge, which we've gotten rejected several times, given we did break out of this wedge this time very briefly for about 18% upside before coming crashing back down. Rejected. Plain and simple terms, you have a lot of pressure here that is trying to push you to the downside, but the more a resistance is tested, the more likely it is to break. Same with a support. Now, the bearish case scenario as well is you have these weird, odd patterns, odd cycles that are in the charts. And if these cycles played out anything like each other, that means you are at the end of this red box that you are seeing right here, okay? That means you are at the end, towards nearing the end of the cycle, which is pretty interesting because you see it continued to climb more towards the end of its cycle, but we had a major crash right here, and this was following earnings. So if you take a very, very close look, we see that on earnings, GameStop did come down the day after, which is very possible, and then one more trading day later, we ended up gapping higher before essentially crashing. Okay, now that gap higher was about a 21% gain after we sold off a little bit, and then we ended up crashing. If you are nearing the end of this cycle, again, I think more signs point towards up than down, but if you are nearing the end of this cycle, then you are due for some sort of, oh, that's not what I wanted. Then you are due for some sort of crash, and I'll show you that right here. Again, less likely scenario. I don't think this is what I see playing out, right? I don't see that playing out at all. If you are somewhere in this peak already, then you would see a very aggressive crash and it would bring you down to this next trend line. However, it's looking more and more likely that you are not even beginning the build-up phase, and we should see a rally before any sort of sell-off. So again, least case scenario, I don't think this is the case, but I want to give the bulls a warning and kind of the bears a little bit of optimism. I mean, fuck the bears, fuck you guys. Sorry for my language, shouldn't be saying that, but for real though. GameStop also on a negative side of things, before we jump into the bullish side of things, is that it is testing this ascending resistance level. As you can see, the more when you break down one, it's real hard to get above it, and you can kind of see that in the charts. However, the last time you were in this lower range and you kind of made this pattern right here, you actually saw GameStop squeeze. That was back in 2021. If you're playing out the same pattern, which looks so similar, then we could see a massive squeeze here, right? That's assuming you're here, After forming this cup, big cup, forming big cup, assuming you're right there, right? That's assuming they play out. And that actually lines up with the bullish case scenario too, assuming to what we've been tracking. So we have this that we've been tracking, box, and then basically what we're tracking it from, oh my God, why is it on this? What we're tracking it from is back here, box. Just make it simple, right? I'm not going to use any crazy terms. So you have these three boxes, and then you come up, and then Roaring Kitty ended up tweeting right here, May 13th, and things went parabolic. We had this tracked out to 40 days, but now we are, as you can see, on the 48-day mark today. Today's the 48-day mark. I'll show you that right now, just to make sure I'm correct on this. Yep, 48 days, right? And that's from this bottom. So if you come and you look at the previous move from this bottom, 48 days in, was this green candle. Now this green candle was about a 20% day, but that's not the important candle. The important candle is what happened after, right? The important candle was a Friday and then a Friday and then Monday, Tuesday. So we went right into a weekend, and then we had a gap when Roaring Kitty tweeted that morning, right? So we had that gap higher. Point being is you have one likely scenario, which is what we're lining up with. You have two likely scenarios, which is what we're lining up with. You have three likely scenarios from the tin, February 24th, when Ryan Cohen posted that ice cream. We talked about it yesterday. And there are probably a couple other ones that I could pull out here as well. And then you have earnings beat. Now we have earnings. And then tomorrow you have quantitative easing, all that other stuff. Now the markets are painting a little bit of a floppy picture as well. But this is an important video coming into the earnings. We also see warrants that have been rallying higher, trading at $4.07. People want these coupons, and they want these hedges coming into earnings just in case anything happens, right? In other words, they want the insurance that if things go crazy and they report any crazy earnings that we don't expect, we want the right to be able to buy these shares at $32. Listen, if we're squeezing, we want these coupons, right? They want these rain checks, and so you're seeing warrants bid up. And if GameStop does squeeze and earnings are very unpredictable, and you do break that, and you break the tripwire and everything, and you're trading higher and higher, and we are squeezing, they have those coupons, right? So the warrants make sense here. Also, just a little bit more tin, because I want to show you AMC's chart. There was another ice cream in the picture that could be coming, the last block to be put in place. We also saw Ryan Cohen's Tetris profile pics where it was the last piece coming into place, all lining up to this earnings. So it would, and I thought about it, right? Because I'm not worried about playing puts on GameStop, and I thought about it as like a hedge, or we've been rallying, we've been climbing higher, we might as well play the downside because that's what they like to do. Everyone's playing into the upside, but there's really not much downside I see as a possibility. Plus the Japanese 10-year yields, all-time highs, things are just setting up perfectly. Now, AMC tried to break above this descending resistance level. It couldn't today, but we are finishing a beautiful picture perfect cup and handle today, where we shouldn't wait any longer for this breakout. How much higher will that breakout be? AMC has 2 points, just like GameStop, and if they move together, likely. And the first point is about $2.95. The second point is $3.85. Where does that mean we're going from here? Well, again, that's about a 27% gain, which is what I expect on GameStop. Or 27% fall would bring AMC to $1.67, which would be very bad. That's about 16 cents post-split or pre-split adjustments, right? 385 would be about a 67% gain. If we saw that gain on GameStop, what would that actually look like? Well, a 67% gain would bring you perfectly to this level at 38.80, basically, which is where that tripwire is, which is where they would maximum pressure to the downside the hedge, and we can see it on the 4-hour time frame right here. Back in May, right, or early April, we rejected 37.49, right? Maximum pressure. That's a 67% move. And AMC would see the maximum pressure there too, because we're at this weird pattern where AMC would be rejecting off of a major level. And if you've honestly, no bias, if you see a bunch of these penny stocks that are shorted into the floor, they have little weird blips and then they get burnt into the floor again, right? So it's not that rare you see an algorithm do something like this. So we could see a major move like that. QCLS is a stock that I'm putting on your radar. It's not sponsored or anything. Someone brought it up in Discord. It's down 10% today, but there's an 11.5% short interest and 147% current cost to borrow fee. Sava, SAVA, one that historically moved with AMC and GameStop. I want you to put on your radar. This thing is building some interesting legs. And if anybody knows Sava, when Sava moves, it has some balls. It has some steam. 17% short interest, 10 days to cover because of low volume. Keep Sava on your radar as well. We're going to talk about a couple other things real quick. But if you're not in the Discord yet or you're not subscribed, make sure you're subscribed and like the video. I appreciate all the support. Honestly, this is all free, but I still urge you to join the Discord server. Top link in the description down below. We have a bunch of trade alerts. I post trade setups in the morning. Discord will likely pay for itself. UK pension funds have dumped US equities on fears of AI bubble. Credit card balances hit an all-time high of $1.23 trillion. That is big. There is so much debt going around, and our numbers that are assuming are good numbers are actually bad numbers, yet so the market's staying up flat on rate cuts, which is actually coming out tomorrow and Thursday. I believe the Fed meeting is. There's a lot going on and the market is on a teeter-totter. People are spending a ton of money for the holidays, but they're not spending money that they have. They're spending debt. They are spending debt on what they have. Now, there's so much other complications. It's for another video. There's things that tie in with the banks. There's things that tie in with individual stocks, consumer plays. Is it real? Is it real data, right? But what we see with the SPY is when the SPY came up to these levels, it's almost forming a triple top. And we're really at a key decision right here. Key decision, right? The last times the SPY was kind of consolidating up here and we started to tilt to the downside. Oh, shit got wobbly when we retested 681. Bang, you flushed. Same thing, you came up, you consolidated. Oh man, things were getting wobbly. You test 681. Bang, you drop. Okay? You're coming up, you're consolidating, you make this peak. Shoot, okay, you're rejecting off of the midline. First signal, not so good. If you close under 684, not so good. You come down off of any data or retracement, you test 681, what happens? Oh shit. Boom, right? You never know. So right now, there's no confirmation you are seeing a move to all-time highs on the SPY. There's no confirmation. We got rejected up here several times. There's a ceiling, and that's not to say we are going to drop. I'm just saying there's no confirmation you see a move up. A couple other things. We opened the candle below this trend line. Not good. You close above it, 684. Okay, reclaiming the quote-unquote good. Again, watch the 684 close. Resistance support, you've seen this chart on my channel already. It is playing out perfectly. You actually came into this resistance, didn't really like it. There's a big bearish zone there too. We got a major flush. And then what happened is, well, you traded in this wedge, you broke out of the wedge, you retested the wedge, and now you are kind of ping-ponging. Rejection, support, rejection, support. What has to hold first? Well, is 688 going to get broken first? And if so, you go to all-time highs. Or is 681, unfortunately, going to get broken again, which we're closer to, by a smidge, and we get a real hard hit on the SPY. So we're going to watch very closely. You close under 684, you're likely to see 681 quicker. You close above 684, you're likely to see 688 quicker, alongside the Fed decision tomorrow being big catalyst as well. But hopefully all of these levels helped you out. Hopefully the update before the GameStop earnings kind of gave you some guidance. Very risky to play. I don't give financial advice. I'm not a financial advisor. Am I playing it? Absolutely. But that is basically it. I don't think I have anything else for you for now. If I can, I'll try to stream the earnings. We don't go live a lot, but it's always fun when we do go live, and we'll just hang out and just chill. That is if I can get the software all set up correctly. I always have issues with that. And then if there's time, right? But overall, guys, I'm very excited. I have custom indicator linked in the description down below alongside the Discord server. I can't list all the things the Discord has right here, but I post my trades as soon as I take them in there. I post my long-term trades, like what I'm adding to my long-term portfolio. We have tons of AI trade alerts in there that give you access to a ton of stuff. So make sure to join. That is it, guys. I love you all. God bless. Lottery Stocks out.